Welcome to the Growth Minded Accountant podcast, where our experts will share best practices on running your firm in the digital age. This podcast is brought to you by CountingWorks Pro. Let's get started.
Welcome back to another episode of the Growth Minded Accountant Podcast. I am your host, Lee Reams, founder and CEO of CountingWorks. And today's topic is how should tax and accounting firms actually measure AI success? So I would argue time saved is only the starting point, right? I see a growing battle in discussions I read on LinkedIn, Reddit. I just had a meeting yesterday with a banker from Silicon Valley and another colleague who runs a large tech company. And we're just talking about, what is the tax and accounting firm of the future going to look like? And the Silicon Valley banker had a totally different opinion of what's going to happen versus the other people that are actually in the trenches doing the work, right? So Silicon Valley believes firms should rebuild from the ground up around AI native systems and autonomous agents, basically. It's kind of cold. Who knows what the user experience is like? Where's the judgment, human in the loop? But that is kind of their approach at this point. So countering that, many tax and accounting firms are trying to say something very different. Our processes may not be perfect, but they work, right? We trust them, we understand them, our clients depend on them, and we are not ripping everything out because someone produced an impressive AI prototype on Lovable, right? So that tension really matters. So AI success will not be determined only by what technology can theoretically do. It will be determined by whether the professionals delivering the work believe in it, trust it, and use it. I think that's the biggest thing, use it, right? So an advanced AI system that employees ignore creates very little value, right? And if it creates even more busy work for them, it even becomes less valuable. But adding a chatbot to every existing product and calling the firm AI enabled is not transformation either. I see that's what's happening with a lot of the legacy platforms that are in the practice management space, for example. And you'll talk to an accountant, they're like, "Oh, we have AI," and it's just tools, but it's still not an AI native system. And that's kind of where Silicon Valley thinks the future is. I believe it'll be somewhere in the middle. So, by adding a chatbot to every existing product and calling it, an AI enabled firm is not transformation either, right? You're still doing the processes the same ways. Maybe you're getting little, 10-minute saves here, 20-minute saves here. So I would argue the real opportunity sits between those two extremes. The question is not whether firms should preserve every old process or replace everything with autonomous agents. I think the question is AI making my practice more capable? Is it helping my professionals make better decisions for their clients, right? Are they getting better financial outcomes for their clients? Is it creating usable capacity that I can use to grow or maybe even have more time off, right? I'm not working 15 hours a day. Is it turning client information into actionable tasks, actionable opportunities for your clients? Is it improving the experience for your clients and employees? That's a huge deal, right? And is it producing measurable business results? Is there an ROI for this? So that is where many firms, I think, should be evaluating AI, not by demonstrations or the greatest prototype, not by the number of features they purchase, but and not only by the number of minutes they saved. I think you got to start thinking now, okay, what is the Silicon Valley vision versus reality? So Silicon Valley often views tax and accounting firms as a collection of inefficient tasks waiting to be automated. And you're seeing Silicon Valley do this already in kind of the HVAC, the trades going after service titan business, and they're kind of doing roll-ups. You see roll-ups in accounting firms right now. And the concept is, hey, so that's what private equity is looking at. And then you got the software companies, but you replace the old systems, you rebuild the workflows, and you deploy autonomous agents, right? Remove as much human involvement as possible, higher income capabilities, right? The logic is understandable, but many legacy systems are very fragmented. Processes depend too heavily on manual work. Information is trapped in different applications, so can they communicate? And professionals spend too much time gathering information and remembering what should happen next. But tax and accounting firms are not software demonstrations, right? They have existing clients, they have trained employees, they have government deadlines, government regulations, they have professional obligations, continuing education, and processes built over many years. So the work also involves incomplete facts, this changing laws. Basically every year you got court cases coming out, you got ethical duties, you got competing objections and different levels of risk tolerance. These are really important variables that are harder to have one solution kind of handle, right? So professionals remain accountable for the result. If they're signing a tax return, they're auditing a business, right? They're doing financial statements. You are responsible for those outputs. So that makes ripping out every established process and replacing it with a AI native system not only difficult but risky and really unrealistic for many firms. So you're starting to hear voices of reason start kind of add that dialogue to this argument. So there's also this issue of trust. So accountants tend to trust processes that have produced reliable results. So if employees do not understand where an AI answer came from, why it reached a conclusion, or when the output requires review, they will just start working around it, right? So that is not always what I'll call resistance to change, but sometimes it is a professional caution. Yeah, I mean, makes sense. But caution cannot become an excuse to preserve every old process forever. So a firm can add drafting, emails, summaries of meetings, search capabilities to existing software while leaving the underlying operating model almost untouched. The same people still initiate every process. The same partner remains the bottleneck. The same knowledge stays trapped in a few experienced professionals, and the same client opportunities are missed, right? So the firm becomes faster without becoming significantly more capable. So that's kind of this other extreme where I see the legacy platforms adding AI tools on top, and they're not necessarily an AI native experience like Silicon Valley is trying to get you to use. So neither extreme is enough. So let's kind of go to the middle. The goal should be to create a more intelligent operating model while preserving your judgment, your relationships, and accountability to make your professional services valuable. So let's talk about traditional workflows versus AI workflows. I think this will start kind of creating a picture in your mind. So firms do not need to replace every traditional workflow. And traditional workflows remain useful for predictable processes. I need to request documents. Documents are received. Work in preparation, work in review, waiting for the client, completed. So that structure provides visibility and accountability, right? But it primarily tells the firm where the work is. An AI workflow can also help determine what the work requires. That is the big change here in your mindset. So imagine a new business client entering your firm. A traditional workflow, let's say it creates an onboarding project, sends an intake form and requests documents, okay? An AI workflow could review the intake form and notice that the business has employees in several states. The owner appears to have low S corporation wages and no retirement plan, right? And several important facts are missing. And that's what the AI workflow can start adding value, right? So it could prepare questions for the advisor, the pro, and identify which processes may apply. So the advisor, human in the loop, still reviews the information, makes the decision, but the advisor enters the conversation better prepared than they ever would without an AI assist, okay? So the traditional workflow tells the firm, hey, this is where the client is in the process, and this is where I'm trying to paint a different picture. An AI workflow helps the firm understand what the client actually may need. So not only does it know where they are in the process, but it's also going to give you, client-facing questions, things to probe. Here's some missing opportunities, perhaps, right? So that is the practical transition firms should be pursuing. So I'm not pitching replacing everything immediately, but I'm also not saying preserving all your old workflows, your legacy ways forever. So you need to identify where intelligence can improve the outcome. And this is where we really get into ROI. If you're going to spend money on new tech, you want to get a return on that capital, right? So that is why adoption and trust must be included in the return calculation. So a software company may claim that AI reduces a task from 1 hour to 15 minutes. And that's awesome, right? But that assumes your employees and staff are actually using it, right? It assumes they trust the output, where there are citations and references that they can double check that this is correct, right? It assumes the system has the right information, garbage in, garbage out, right? So it assumes the process fits the way that your firm actually works. And it also assumes the employee does not spend another 30 minutes checking or recreating the results. So I saved 45, I just put 30, I've saved 15. So you understand where I'm going. So theoretical time savings and captured time savings may be very different. So are professionals using AI inside real client work? Do they believe it actually helps them? I think most would say yes now, yes to both questions. We still see pushback, but so that would be issue one. And then do they understand how it reached the result? How often do they correct it? That human in the loop, that judgment. Where do they abandon the AI process and return to the old workflow? A less advanced system that employees use every day may create more value than a more powerful system that sits behind the real workflow. So adoption is just not a soft measure. It's part of the economics here. So, time saved is not the return, right? So most firms begin by measuring speed, which we led with. AI drafted an email in 30 seconds. And that's great because think about it, you're in a blank state, you get a client response. In the old days, I gotta research what they're asking. I got to make sure that research is correct. Then I have to draft how to write a response to the client. That is all very time consuming. AI now can do that research, draft it, cover all the points. You can review it and send it very quickly. That is huge time savings. It summarized that meeting in a couple minutes, right? So you had an interview, you took the transcript. Now you had a summary, an action plan. It reviewed a document in a fraction of time. These are all real benefits. But I'm going back to time saved is only the starting point. So suppose AI reduces a 1 hour task to 15 minutes. What happened to the other 45 minutes? Did the employee complete more work? Did the firm reduce a backlog? Did turnaround time improve? Did the professional spend more time with the client? Did you actually just lose 45 minutes of billable time, right? Did the firm create room for advisory services? Or did the time disappear into more email, meetings, and admin work? And I think that is what's really important to understand. So saving time creates potential capacity. The firm still has to capture and direct it. So if employees have scattered hours, but nobody changes how work is assigned, the firm may realize very little benefit of this powerful technology. So the return appears when the firm, I would say, redesigns their processes around what AI now makes possible. So the right question is not how many hours did AI save? It is, what did the practice become capable of doing in those hours? So I'm going to kind of keep moving this along. One of the clearest opportunities is reducing the cost of preparation. So professionals spend enormous amount of time, searching through emails. You're locating or chasing documents. You're reviewing prior notes and reconstructing what happened months ago. Only after gathering the information do you reach the work the client is actually paying for, right? So that's where your judgment comes in. So that is one reason senior professionals become the bottleneck, okay? Their experience is valuable, but too much of their time is consumed assembling these facts required to use it. They don't have photographic memories. They got to go back and look at documents and kind of put this together. So AI should gather, organize, and compare and summarize this relevant information beforehand, okay? So the professional can now spend more time just analyzing the issues, perhaps asking even better questions, more probing questions, and then making a recommendation. So the goal here is not to remove professional judgment, is to stop wasting professional judgment on preparation a system could perform. I can't tell you how often I've tried to explain this concept to our own audiences and some of our subscribers. And like, I don't want to use AI. AI isn't for me. I'm not an AI enabled firm. I just gave a perfect example how you could do a better job in less time. It makes you superhuman, right? So perhaps maybe the argument I should be making is, how do you measure AI success? And that is really the topic of today's podcast. So I've put together 4 areas I would evaluate across your firm to look, what are the issues that really matter and kind of, what is the argument pro and con, right? So adoption and trust. So first, are professionals using and trusting it inside real work? Not merely logging in, not attending a training session, not trying it once, right? Is the system becoming part of how your firm operates? So which AI processes are used repeatedly? And this also helps you create a standard across your company. So every email is responded to in a certain format or a certain tone or in a certain expectation of time, right? That is what AI can make your firm very valuable. So, where are employees collecting the output? Where are they working around it? Do they understand the sources? Do they trust the citations? Do they know where professional review, human in the loop, is required? So trust does not come from forcing employees to use AI. It comes from reliable work, supporting context, and clear boundaries. So the system has to earn its way into the workflow. So if you don't trust it, you're not going to use it. So that leads into number two, which is capacity and consistency. So did AI create usable capacity and prove my consistency across the firm? Did the firm complete more work without adding the same amount of labor, right? Did turnaround times improve? Did bottlenecks decline, right? Did employees spend less time researching, organizing, or repeating routine work? So, did the firm's process become easier to repeat? That is so valuable to having just a machine. It's kind of that flywheel, right? So this is where AI skills become more valuable than isolated prompts. And I'm hoping I'm painting a picture of where you should see AI kind of as a success, right? So a prompt is a one-time instruction. I can ask a question, it can help me do research. A skill then defines how a professional task should be performed. It can specify the information required, questions to ask, sources to review, boundaries to observe, so guardrails, right? Output to create. This is what I want it to look like. This is the elements I want in an output, and points requiring professional approval. Here is human in the loop. Here's my draft. Do I agree, disagree, make a change, or send it out to a client? So imagine a manager who is excellent at preparing for retirement planning conversations. We'll give that example. So the manager knows which facts to gather, which questions to ask, and which issues are easy to miss. Most of that knowledge may live inside the manager's head. So a well-designed AI skill can make that process available to more people inside the firm. So you take that person's expertise, you create a skill that now can be used by multiple people. It didn't replace the manager, it amplified their knowledge, right? And more importantly, it helps your employees begin with a stronger process and deliver better prepared work. So the real measurement is whether the firm's expertise became more repeatable and less dependent on individual memory. And especially as you scale to 30 people, 40 people, or perhaps you don't need to scale as much because you have AI skills doing all these. You don't need as many people, right? So this leads into what I consider the biggest element that most people are missing right now, which is the client intelligence and action. So, did AI help turn the client information I already have into action? So that's what we're doing here at CountingWorks Pro, for example. We have the ability now, all the conversations you've had, the inbound messages, the intake forms, the documents that the client has, we've scraped all that data. It's context now, right? And now that can help you prepare for that meeting, prepare a customized intake form to prep you for questions that you may not have, things you may have missed, right? So most firms already possess more useful information than they realize. This is your gold mine. And this is also your moat against these AI startups. You have all this intelligence, so start using it. So it sits inside that tax return. It sits inside your QuickBooks financial statements, your payroll records, emails, your meeting notes, transcripts, uploaded documents, right? So this information exists, but much of it remains inactive. I don't see pros before they're interviewing going back 5 years or 4 years or looking at all this notes. They might look at last year's tax return, but even then, are they really putting the time in to really dive deep? And what I think is that information exists right now, but much of it remains inactive. So I'll give an example. A client approaches retirement. Nobody notices. CountingWorks, we would say, hey, this client is not only, at this age and this level in their business, they're thinking of selling their business. They're thinking of entity selections, tax issues, planning for that exit, right? And perhaps now, you might not even notice. Most tax accounting firms, they don't even segment their client database. They don't even know in their CRM, where people are in their lives and their life events. So that is the power of AI, right? So, I'll give more examples here. A business begins operating in several states. Nobody connects the information. An S Corp reports significant distribution and relatively low wages, right? The return is completed, but the issue never becomes a proactive conversation. I'm just giving examples. You can go on and on. A client's income changes in a way that affects student loan payments, for example. That's a planning opportunity. Social Security is another big one. Getting divorced and the lower income in the divorce, can they get access to their husband or wife's Social Security payments, right? So I'm just giving you, there's examples here that really are tens of thousands of dollars, and that AI could probably, find a lot more of these opportunities. So what happens now is that planning opportunity is missed. So, I would argue no professional can continuously review every piece of information across hundreds or thousands of clients. It's just not possible. Some of you might be able to do that. You're the savants, but I do know someone that can, and that is AI. And AI can help your firm recognize what it already knows. So the productivity question is, can AI, write an article about Social Security? The intelligence question is, which clients may need a Social Security planning conversation, right? So the first one produces content. The second one creates an opportunity to help a client. So, but intelligence alone has little value. The firm still needs a process. So who reviews this opportunity? Who decides whether it is valid? We want to move forward with it. Who then contacts the client? What service is offered? Am I doing a proposal? Have I priced it? How do I price it? How is the outcome tracked? So AI creates value when intelligence triggers action. So I'll kind of define it this way. Opportunity identified. Professional reviews it. You have a client conversation, a proposal, and then you go into the traditional workflow, engagement and delivery. So that is how client information becomes a growth engine rather than another report. This is such a big opportunity for our profession, and it's something that a lot of people are missing. So, which comes out to the biggest one, we're going to talk about business and, more importantly, human outcomes. So this is my fourth point. So did AI improve the business and the experience of the people inside it? So did revenue increase? Did margins improve? Obviously, if you required less admin or less labor, I would say margins would improve significantly, right? Did retention strengthen? Are we more responsive? Are our clients happier? Are they getting better financial outcomes? Because now I'm using AI to predictively surface advisory opportunities. Did the firm respond to leads faster or to an inbound message faster? Did it identify services existing clients needed proactively, right? Did the cost of delivering the work decline? So revenue alone is not enough. If AI creates more advisory relationships or engagements, but each still requires excessive preparation, partner involvement, and rework, the economics remain very poor. And I think a lot of you are already experiencing this. You're having challenges even selling these advisory services. This is where the power of AI can really provide dividends, right? So firms should measure the cost of delivering the result before and after AI. So how much staff time was required? How much manager review? How much partner involvement? How many client follow-ups? How much rework? So the client is not purchasing the number of hours required to produce the answer. The client is actually purchasing the result, right? And that's where value really comes from. So if AI allows your firm to deliver a stronger result more efficiently, the firm should capture some of that value through better margins. That seems obvious, right? And the human outcome matters too. So our partners spending more time exercising judgment and less time searching for information. Our managers coaching instead of correcting avoidable inconsistencies. Our employees developing higher value skills instead of copying information between systems. That is a huge pain. You're rubber banding it. There's security issues. Who knows what's going on there, right? So our clients receiving faster, more proactive, and better prepared services. And I think that is the goal for everybody, right? So we're not just trying to automate the relationship. It is to automate the work that keeps the relationship strong, right? That's what we're really trying to do. Uh, and then the big thing I think is judgment remains the boundary. So across every measurement, the firm must preserve quality, security, judgment, and professional accountability. So a process is not successful merely because it's faster, more profitable, or more widely used. The work still has to be reliable. The firm still, you own the final output. Okay. So AI can help identify issues. It can organize data and facts. It can frame questions from the analysis of that data, right? It can summarize this information and even challenge maybe one of your initial conclusions. I see this all the time where I have a specific game plan or I have my own opinion of things. And once I start using AI, it actually kind of adds to it, right? It makes it more robust. I think that is really important. So the professional still needs to inspect the authority, right? Verify that it applies and determine whether the client's facts support the conclusion. So human review is not evidence that AI failed. That's actually positive. That's AI did all the busy work, and now the human can come in and say, "Hey, this is evidence to me that the firm is actually designed correctly. I'm actually using AI and technology the way I want it to be done." And human in the loop is there. So Silicon Valley often treats the human in the loop as, I'm going to call it an inconvenience, that they think technology will eventually remove. But in tax and accounting, the human in the loop is often the product. So the client is paying for your interpretation, your judgment, your accountability, and the willingness to stand behind a recommendation. So I don't think the goal is not to automate your judgment. I think is to give you, the professional, more time and better information to exercise it. That is the future. That is where I want you to really think about how AI is really going to develop dividends for you in the future. So when you are evaluating an AI investment, you can ask a few questions, right? So are professionals using it and trusting it inside real work? Is it creating usable capacity and making our expertise more repeatable, more dependable, and it's kind of at a same standard? So one pod isn't doing one way and another pod is doing it the other way, right? Is it turning client information into intelligence and action? It's the missing element for most firms. Is it improving business results and the experience of our clients and employees? You want to be like Apple. You want to be like Amazon. People are expecting those type of client experiences. So then place one requirement across all four. Are we preserving quality, security, judgment, and professional accountability? This is a better measurement of what AI success should look like. So not how many features were purchased, not how many prompts were saved, not how many employees someone claims could eventually be eliminated, and not simply how many minutes a task took. The real question is whether the firm became more capable. I think this is what the firm of the future looks like. I do not believe the winning firm will simply be a legacy firm with AI features added to every product. I I think that's kind of what's happening now. And then you got the AI natives, right? And I also don't believe the most successful firms will today just rip out every process and hand the business to these autonomous agents, the Claude bots, and you're seeing a couple firms do it. I'm like, oh my, is the risk and liability to that decision is immense. I mean, it could risk your entire business, right? So the firms that win will build a bridge between this tech and this capability and the professional reality of what's on the ground. And that is what a lot of the tech Silicon Valley people don't understand, like what your relationships, what really happens in tax and accounting, right? So they will preserve processes that still work and replace those that are no longer, that no longer make sense. They're clunky, okay? They will use AI to reduce preparation, connect information, and make their best thinking repeatable. So they will introduce new capabilities in ways their people, their staff, and clients can understand and trust. And I think they'll turn client information into, I call it predictive service, proactive service, whatever you want to call it. But let AI assist you and finding things. I call them soft advisory. There's so many opportunities in your client base every year that just get missed. You don't have enough time. So, they will automate work without automating accountability. You're responsible for this final output. So I think they'll also measure AI based on what changes inside the business. So for the last few years, everyone is asking, what can AI do? I think the more useful question is, what will our professionals trust AI to do? Really important, right? And what should our firm become capable of doing because of it, opening up these new opportunities? And that is the conversation firms, I think, need to have now. So, take a look at the AI investments inside your firm and ask three questions. Are people actually using and trusting them? Are they making the firm more capable? And I go back to also, are they just adding more admin, right? And is the new capability producing better client and business outcomes? Because that's going to be your competitive edge. That's what you're going to need to be able to compete in the future. So I think these are really important items. And I think it's really important to start looking at things. You need to look at your firm, uh, at where are you losing capacity? Where are competitors coming in and beating us now that they have, some systems that are just better than what we're doing, right? And your customers are aware of all this because they're seeing all this. So they will experiment, so you need to keep that moat as tall as possible or as wide as possible to make sure your relationship stays strong. So, you want to examine traditional workflows. Are they still serving the firm well? And where could AI meaningfully expand what the firm is capable of doing? And then you can really look at it and create a practical path forward. So you don't have to rip everything out, not AI for AI's sake. And, I know there's a lot of pushback everywhere, but a clear plan for building a more intelligent, proactive, and scalable firm. So I hope this has kind of maybe made you think a little bit differently on as you guys analyze what's out there. Again, all the different noise out there. At CountingWorks Pro, we are doing what I'll call a firm growth breakdown, where we actually will look at your firm and kind of see the gaps, where the opportunities are. How many clients do you have? How many clients are doing advisory? Are you able to have soft advisory opportunities, right? Is your firm showing up in ChatGPT, those kind of things. So if you're interested in us looking at your firm and kind of making you future firm ready, we have a firm growth breakdown that I will leave in the comments or the description of this podcast. It takes us 24, 48 hours. My humans do it, and we'll actually paint a picture of what your firm can look like in the future. So hopefully this was valuable information. I feel then again, we just had, ironically, again, I had this Silicon Valley banker discussion about this with another colleague, and it's really polarizing. The colleague is like, hey, AI can't do this, AI can't do that, I can't rip everything out. This is the way I do things. While the Silicon banker is like, you don't know what's happening up there. You don't know what all these disruptive technologies are being invested in. And it is a race with billions and billions and hundreds of billions of dollars financing it. So I think, again, somewhere in the middle is going to be the reality. I like those firms being the winners. Use AI, like I talked about today, to make yourself even more valuable to your client base. So again, thank you for being a listener to the Growth Minded Accountant. Please share this episode with other tax and accounting firms, not your competitors. And we'll look forward to seeing you in the near future. I'm going to take a little break here, so we'll probably go dark for a week or two. Hopefully you're enjoying your summer, and we'll talk again hopefully in a few weeks. Thank you.